China's economy has entered the year with surprising strength, even as geopolitical tensions intensify across the Middle East. The first quarter delivered a growth rate of around 5%, exceeding expectations despite disruptions linked to the ongoing conflict involving the United States, Israel, and Iran. On the surface, the numbers suggest resilience.
But a closer look reveals a far more complex picture, one where structural weaknesses, geopolitical uncertainty, and shifting global dynamics intersect. A senior Chinese official underscored this early momentum, stating, "We have had a good start to the year, which is truly rare and commendable." This fully reflects the resilience of the Chinese economy.
The remark reflects Beijing's effort to project stability and confidence at a time when global markets are unsettled. Yet, the underlying drivers of this growth and the sustainability of the trend remain open to question. Exports have been the backbone of China's recent performance. In the early part of the year, outbound shipments surged significantly, driven by strong global demand and China's entrenched position in manufacturing supply chains. Industrial output also showed notable gains, reinforcing the narrative of a production-led recovery. However, this export-driven momentum began to slow as the Iran-related conflict disrupted energy markets and increased uncertainty among trading partners. At the same time, China's domestic economy continues to lag behind. Consumer spending remains weak, reflecting deeper concerns among households. Years after the collapse of the property sector wiped out substantial household wealth, confidence has yet to fully recover. The real estate downturn, which began around 2020, left developers burdened with massive debts and significantly reduced demand for housing. Prices remain unstable, and the sector continues to drag on broader economic performance. Local governments, too, are grappling with mounting financial pressures. Having accumulated trillions in liabilities, many are now struggling to service their debts amid slower growth. This fiscal strain limits their ability to stimulate the economy through infrastructure or public investment, further complicating recovery efforts. Deflationary pressures add another layer of concern. Weak domestic demand combined with high production capacity has led to falling prices in several sectors. This environment squeezes corporate margins and discourages investment while also putting downward pressure on wages. The result is a feedback loop that reinforces consumer caution and slows overall economic activity. Despite these internal challenges, Beijing is aggressively investing in sectors it sees as the future of growth. High-tech industries and green energy have become central pillars of economic strategy. China now dominates global manufacturing capacity in renewable technologies, controlling a substantial share of supply chains for solar panels, wind turbines, and electric vehicles. This positioning could prove advantageous as countries worldwide accelerate their transition toward cleaner energy sources. Energy security, in particular, has taken on heightened importance amid the Middle East conflict. China's large reserves of oil and its diversified energy mix, including significant investments in renewables, provide a degree of insulation from short-term shocks. However, the country remains heavily dependent on imported energy, with a significant portion of oil and gas flows passing through the Strait of Hormuz. Any prolonged disruption in this critical choke point could have serious implications. The impact of rising energy prices is already being felt. Businesses are facing higher input costs, and some have begun signaling price increases. One market participant explained the situation bluntly. 1 week after the war started, prices started going up, and they've continued to climb until now. We will adjust the prices after product stocks run out. The prices are expected to rise by 10%. This reflects the broader inflationary pressures that could emerge if the conflict persists. On the geopolitical front, China is positioning itself as a stabilizing force. President Xi Jinping has engaged in active diplomacy, emphasizing cooperation and multilateralism. In one key message, he stated, "We should strengthen communication, consolidate mutual trust, cooperate closely, oppose the world's retrogression to the laws of the jungle, and jointly safeguard genuine multilateralism and global peace and development." The statement underscores Beijing's attempt to contrast its approach with what it portrays as more unpredictable behavior from other major powers. This diplomatic posture has coincided with increased engagement from global leaders. Visits to Beijing by heads of state from various regions signal a shift in how countries are balancing their relationships amid uncertainty. For many, China represents a stable economic partner, even as political differences remain. Analysts are divided on whether China is truly benefiting from the current geopolitical climate. Some argue that Beijing has gained a political advantage by presenting itself as a responsible global actor. Others caution that the economic benefits may be overstated, pointing to slowing export growth and the vulnerability of global demand. There is also debate over the role of domestic consumption. Critics argue that China's economic model remains heavily skewed toward production and exports, with insufficient emphasis on household spending. This imbalance limits the economy's ability to sustain growth independently of external demand. While Chinese households hold substantial savings, uncertainty about income prospects, employment, and the broader economic environment has dampened their willingness to spend. Labor market challenges further complicate the picture. Youth unemployment remains elevated, and wage growth has been sluggish in recent years. These factors contribute to cautious consumer behavior, reinforcing the reliance on exports as the primary growth engine. At the same time, China has made efforts to diversify its trade relationships. A growing number of countries now count China as their largest trading partner, reducing reliance on any single market. This diversification provides a buffer against external shocks, but does not eliminate exposure to global downturns. Technological capability is another area where China continues to build strength. Investments in innovation, manufacturing efficiency, and industrial capacity have enhanced the country's economic resilience. These capabilities, developed over decades, are now helping China navigate current challenges more effectively than some of its peers. Still, the question remains whether these strengths can offset the structural weaknesses. The property sector's prolonged downturn, high levels of debt, and demographic challenges, including a shrinking population, pose significant long-term risks. Addressing these issues will require substantial policy adjustments and sustained effort. The international dimension adds further complexity. Relations with the United States remain a key factor shaping China's economic trajectory. Trade tensions, technological restrictions, and geopolitical rivalry continue to influence business decisions and investment flows. While both sides express interest in maintaining stable relations, underlying competition persists. The potential for currency shifts has also entered the discussion. Some transactions related to energy trade have reportedly been conducted in China's currency, raising questions about the future role of the U.S. dollar in global markets. While such developments are noteworthy, most analysts believe that any transition away from dollar dominance would be gradual and limited in scope. Looking ahead, China's economic path will depend on its ability to balance internal reforms with external challenges. Strengthening domestic demand, stabilizing the property sector, and managing debt levels will be critical priorities. At the same time, maintaining export competitiveness and navigating geopolitical tensions will remain essential. The upcoming interactions between global leaders, including potential meetings between Xi Jinping and Donald Trump, are likely to draw significant attention. Such moments will not only reflect bilateral relations, but also signal broader shifts in the global economic order. For now, China stands at a crossroads. The early year growth figures provide a measure of optimism, but they do not fully capture the challenges ahead. The economy's resilience is evident, yet its vulnerabilities are equally clear. Whether Beijing can turn the current crisis into a lasting advantage will depend on how effectively it addresses both domestic and international pressures in the months and years to come.